Tuesday, August 28th, 2018, Maneco 64, home of alternative economics and contrarian views. This morning I'd like to talk about the stock market, especially the US stock market, as the S&P is making all-time highs. The Dow, of course, hasn't made all-time highs. Some of you will say, keep talking about gold, how you believe in precious metals, physical gold and physical silver, and that it's a dead asset, hasn't done anything. So today I'd like to talk about my experience being in the UK, having a currency other than the dollar, and what gold has done for my circumstances and in the last more than a decade. And I'll go back to 2000. And I'll talk about what's happened in terms of the price of gold, the price of the stock market, the currency, and all that, and even in dollars, what's really happened to the price of gold. I won't touch up on silver right now, but just gold for the moment. Before that, though, I'll look at what the markets are doing this morning. It's going just after 8 o'clock London. Spot gold right now is actually right near the highs of overnight. We're at 12.30. The high's been 12.70. So only up $1. It's still got a good resistance around 12.13 or thereabouts. So we're right near there. That was the high from 2 weeks ago. So that's like a key technical level in the short term. Silver right now is virtually, it's up a cent at 14.90. The Dow Jones future is up 26 or 0.1% at 26,075. S&P is at 28.96. So that's up 1.25. And the NASDAQ 100 future is up 10 at 75.69. Currency-wise, we've got the pound at 128.94. That's unchanged overnight. The euro is a bit stronger, up 0.16% at, the euro, 0.16% at just below 117. And the dollar is unchanged against the yen at 111.11, all ones. The Chinese currency, while the dollar is up 0.1% at just below 680. Crude oil 68.67, so not moving that much crude in the last few days. The Turkish lira 619, so still the dollar is 619 against the Turkish lira, so still fairly weak. So what about my circumstances, gold, stock market investments? Well, up until, around the early 2000s, 2001, up until then, I had started contributing to a pension, a private pension in the UK back in, I think, 1995, 96. And I was putting... it's like an IRA, I guess, for the US. I was putting money into the pension every month. I had a pension provider. We sat down when I opened a pension account. I said I want to have such and such percentage in these kinds of assets, mostly in the stock market. And also I used to get a tax deduction, which meant that if I put 100 pounds in, for example, I would actually be able to get 140 pounds worth of investment, which was a good deal, tax efficient. And at the time, I didn't even think about gold or silver or anything like that. The thing to do was to put your pension in the stock market. And it grew quite well. I had 40% kick in from the tax scheme. But all of a sudden, 2000, 2001, the stock market dumped everywhere in the world, especially in the UK, in Europe. And at the time, looking back, you could have said, oh, you should have just kept that. It would have been fine now. Yes, in hindsight, it's very easy But then, how old was I back then? Probably 33, 34. I was like, whoa, what's going on? I don't like this. And there's a lot of talk in the media, everything, you know, how the pension system had been screwed up by Gordon Brown because he changed dividend tax rules. And then I just decided, well, I've had enough of this. I'm not putting any more money into this pension. And that's when, around the time 2002, that I decided to invest in gold. And you might be thinking, oh, you wish you hadn't done that. You wish you'd stayed in the stock market. But well, I want to show you some numbers and charts. First of all, I want to start with gold, and I'll look at it in dollars. Okay, so we go back to the chart from 2000, I'll take the beginning of 2000 as an example, as a reference. So we were at 284, so that's the number I've taken. And yes, gold went up to above 1900 a few years ago, or 2011, and we're now at 1200. But in dollars, if I take the gold at 1211 as I speak, it's up 326% in US dollars. Okay, that's gold. And then you say, wow, you should have stayed in the S&P. Okay, let's go look at the S&P. I'll take the high actually in the beginning of the year. It's not exactly the beginning of 2000, but the high was basically 1550 in the S&P. So if I stayed in the S&P and now it's at 2897 as we speak, it's up 87%. Yeah, that would have been great. I would have, but remember, I had my pension partly US stocks, UK stocks, some property stocks, property market. So S&P up 87, gold in dollars up 326, right? And then I'll just look at my currency, my base currency, which is the pound. This is where I live. I need pounds to transact. Well, the pound in 2000 was, let's say, 162. Where's the pound right now? Well, as I speak, is 128.90. So the pound is down 20%. So I guess being in the S&P would have protected me. So I guess I can add 20% to that. So it's basically I'm up 108% if I had kept the S&P. So that's not bad, but still not as good as being in gold, or 326%, right? And then we'll go look at the pound in gold terms. So I've got here, as you can see, the LBMA price table, and at the end of 2000, gold in pounds was around 180. It says there 182, but the beginning of the year is 176. So let's take 180. Where's gold now? Well, it's at 940. So gold has gone up 422% in pounds. So that's better than 108% in the S&P, right? And the other one I wanted to look at is how the FTSE 100, which is the equivalent of, let's say, the Dow or the S&P in the US for the UK. So where was the FTSE? Well, let's take it at the high in the beginning of 2000, just around the time. Well, I got out. I stopped putting the money in, towards, I stopped putting the money in around 2001, 2002 when it had dropped already. But in 2000, it got up to almost 7,000. Let's say it got up to 6,900. So where's the FTSE now? Well, 7,623, which is up 10% in pounds. In real terms, if you want to call the dollar real terms, which I think is tenuous to say, but with the dollar being up 20% against the pound, or the pound being down 20%, I've actually lost 10% in the reserve currency of the world. So what am I trying to say here? I'm not trying to tell people who have their pension or some money in the stock market to get out of everything, put everything in gold. No, this is up to you to decide. I could have kept, and I did keep my pension. I didn't put any more money into it, but I've kept it. What I'm trying to say is that even if you are not going to buy that much gold or silver, have some of it as insurance. And I would add that back in the early 2000s, we didn't even have the problem of counterparty risk. We didn't have banks failing, financial institutions like AIG failing. But in 2008, we did. And I just think that having something out of the system, physical gold, physical silver, or any other asset that you can touch that is not financial or paper related, is a good thing to do, because in the next crisis, it's going to be worse than the early 2000s, and I think it's going to be worse than 2008. I think it's going to be a crisis of currency. It's going to be especially a crisis of counterparty risk, and you might have your pension assets or whatever stock market assets you have in the system through investment houses, through brokerages, through banks. And again, I'm not trying to tell you to get out of that at all. All I'm saying, it is, I think, prudent to have some kind of insurance for that. And that is gold and silver. And it can be anywhere, from 5%, 10%, 20, 30%, depending on your circumstances and on the homework that you do and the way you feel about it. So yes, it's great that the stock market is making all-time highs, but we need to look back. And I know a lot of you are, of course, not the same age as me, or maybe older or younger. So this is my experience. So looking here back in the last 18 years, the asset that's protected me, and I'm talking about liquid assets. I'm not talking about my property, the house I live in. That's done quite well as well, but that's not a liquid asset. That's something to live in. You might have other properties or real estate as investment, but this is about liquid assets. Assets you can sell very quickly and cash in. A property or a house, you can't do that. So yeah, looking back, I'm glad I got into gold and did not keep putting money into the stock market, and it's actually paid off for me. So am I telling you to get out of the stock market? No. The way it's looking now, especially the S&P, it looks like we could continue to go higher. You're willing to sit through the pain, and you willing to risk the counterparty risk that will come, in my opinion, with the next crisis. Yeah, just stay there, but also have some insurance. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I'll talk to you later. Take care. Bye.